What is going on, SoFi fans? Welcome back to Financial Journey. So today I'm going to give you a good overview of what the data behind the scenes is all saying and why this upcoming Friday might be a very good pivot point for the broader economy and obviously ripple down through to SoFi. So I'm going to go over all the stuff you need to know, but first make sure you guys hit that thumbs up and subscribe, always greatly appreciated. And with that, let's get right to it. So I'm going to start with shorts since I'm on Ortex right now, and I like to use them as a very good benchmark. I don't see SoFi squeezing at this stage in the game, but once again, using them as a benchmark is fairly realistic. Short score is currently 73, utilization is 100%, and right now the market did close a couple of minutes ago, so they did end up returning 679,000 shares. So that's pretty good in the grand scheme of things. Still, there's 109.71 million shares being shorted, which works out to be 13.97% of the free float. Even cost to borrow, that's gone down a lot. So the average is 0.86%, and that's an annual rate. So it is very cheap for shorts to increase their position. So the fact that short interest has been going down today and cost to borrow also went down, that is also fairly optimistic. Behind the scenes, it is once again that time of season when institutions are disclosing their positions in SoFi to the SEC through the 13Fs and various things. So as you can see, based on the latest round, a lot have kind of increased, decreased. It's kind of mixed. So you do see some shorts increasing 145%, some other institutions or ETFs, I should say, 122%. So right now, there's no real definitive kind of trend right now, but the big players, as I always say, are for the most part going to be the first week of February. So that is when the BlackRock vanguards of SoFi is going to be disclosing their position. So that is the really big point to watch for. And that does for the most part piggyback with SoFi's earnings. So definitely going to be possibly a double catalyst depending on what happens behind the scenes. And as well, I like to always look at what is happening both on the options front, dark pool, secondary market. And this is the options from today, the intraday options. And you can see that there is a lot of calls being purchased. So in general, that could be seen as a very positive sign that SoFi is at a very substantial discount compared to what it should be. On the contrary, though, you do see a lot of puts first thing in the morning. So right now, similar to like I mentioned, when it comes down to the institutions, it is a little bit more mixed. Once again, I'm doing this video, I'm just listing the actual data points. It's up to you guys to do your own due diligence. I'm not a financial advisor. I'm listing the points. If you find some of which what I say beneficial or relevant, take that. If not, disregard. Simple as that. So when it comes to this though, I really like to look at what is happening on the secondary market. So on the dark pool, not too really relevant transactions today, but for instance, on the secondary market, which is an exchange that you and I trade on, typical retail investors, there was three big notable trades, a $1 million trade, 2.59 million, and 1.08 million. So definitely that is very optimistic, all of which happened after hours. So 8:30, so pretty much right at the beginning of the market. And then these two just recently did happen after hours. So once again, I think this is a very optimistic stance to the fact that big money is clearly buying on the secondary market. And when it comes down to a recession, I know a lot of institutions just throw out the word recession very freely, but I actually disagree that there is ever going to be a very big recession. And of course, when institutions or even myself bring up the word recession, we're talking about a little bit more of a 2008, possibly worse scenario, because I know technically we are in a recession as of right now. But with this latest data or this article that did come out, 8 in 10 say 2023 will be a year of economic difficulty. And they're basically bringing up the fact of it being a little bit more of a domino scenario or delayed effect due to the actual interest rates increasing. So once again, I think this might play into a little bit more of a bigger picture, but based on BlackRock, a lot of big institutions have also come out saying that the tail end of 2023 or second half is going to be optimistic and bullish. So once again, I think it's a little bit more of a short-term difficulty. I don't see a very big recession or a 2008 kind of scenario happening, in my opinion, because of the data points. And herein lies exactly what I mentioned on what is happening this upcoming Friday. I like to look at the economic data and real stats, because it's one thing just shouting out saying that a recession is going to come, but you don't have anything really to back it up or to prove it other than Feds raising the rates and just making a lot of inconclusive decisions or kind of estimates. But right now, non-farm payroll is coming out this Friday, and the estimate right now is 200,000. And as I've always said, consumers are for the most part a very good backbone and good indication of how well the economy is running, because as of right now, the consumers are still out there making their money, still earning their jobs and various things like that. So there's no real reason to really assume that the consumers are, for the most part, struggling. And of course, that could very much change with this data, or for instance, going into next week as well. But as of right now, it is still very optimistic, and it has been optimistic. Of course, this is very much linked to SoFi's sector, so the banking sector. Of course, banks are also a very big pivotal point of the greater economy, because they are the pillars, because they're basically the ones loaning the money out to consumers, to banks, to pretty much continue the overall cycle of the economy. So it is very much linked. If consumers for the most part are showing good data points, then this is going to very much positively affect SoFi's business. So like I said, this could be a very good indication of a very big pivot point, and that will definitely help SoFi, because SoFi has really been lagging compared to the rest of the sector. For instance, even today, a lot of the big banks have all been very much green. SoFi, as you can tell, has been red. So currently it did close 2.39%. Behind the scenes, SoFi is struggling for various reasons, as I've brought up in several videos in the past, but I think in general, you need to think long-term with SoFi, and even more so on the technicals. They've been holding some pretty good support. So it did hold that central Bollinger Band today. So again, that could be seen as a positive sign. And even though it did pull back 2.3%, give or take, it still does have that bullish sentiment on the actual stochastic. So black line above the red. Again, that could be seen as a positive sign. Momentum number retail investors are getting out today. So 2023 might not be SoFi's year for retail. I'm not really sure. Maybe just retail is sensing something bigger coming. Once again, I'm not necessarily sure when it comes down to that or the justification. On the actual chart, like I said, higher percentile of the Bollinger Band, and in general, we might be testing that 50-day moving average soon, so $4.91. I did take advantage today and brought my average down to $4.80, give or take, from the $4.92 or whatever it might be. So I think in general, it might be a very good time if you do have a long-term horizon on SoFi to add or increase your position. But once again, I'm not a financial advisor. These videos are for entertainment purposes only. I'm listing points. If you find it relevant, then take it as it is. If not, just disregard it. Of course, I bring up a lot of different things, and even in general, a lot of videos, I bring up a lot of really mixed kind of points. So once again, you guys just sift through it all and determine what is and isn't relevant. So at the end of the day, let me know your thoughts on SoFi in the comments below. And if you've been adding, selling, whatever it might be, give yourself a shout out, because it's been a very volatile 2023 so far with already one day in. So once again, I think it's going to be a very fun situation for the rest of the year for SoFi, and hopefully the tail end of 2023 might actually see some very significant gains if, like I said, the consumers and the data behind the scenes is all continuing on how it is. So once again, let me know your thoughts on that. Don't forget to hit that thumbs up and subscribe. Always greatly appreciated. If you do like my channel and support the growth, take a look at my memberships, link in the description below, or just hit the join button at the bottom of the screen. With all that said, I appreciate you guys watching, and let's all make a lot of money on SoFi.